Hello traders, Doc here. In this video I will explain some of my previous trades and show you how you can take these simple trades. If you watch this video until the end, you will see what all these trades have in common. This is a British pound US dollar trade. We can see here that price formed this massive bullish move, but this zone here I marked as a potential resistance. The reason why is because on higher time frames, in this case 2-hour time frame, we can see that this zone acted as a resistance here and here. So I expected to see some bearish pressure here, and as you can see, that is exactly what happened. Price formed this bearish reaction to this zone, and then I scaled down on a lower time frame, 15 minutes, to look for my entry level. We can see that price here formed these lower highs that can be connected with this bearish trend line, and I also noticed this minor zone here. This is basically a new lower low, and then price broke it and went up to test this previous low with this massive bearish wick rejection. And then price formed this bullish move to test this zone again, but this time it also tested this bearish trend line, which means that we have confluence here between this minor zone and also this bearish trend line. Additional reason to look to sell gave us this stochastic RSI indicator, which indicates potential bearish move. So after this massive bearish candlestick has formed, I decided to sell here and put my stop loss above this previous minor zone, and I decided to aim for this previous low zone that we can see that price rejected from twice. Also we have this round number, but I didn't want to aim for this round number. I put my take profit just above it. As you can see, I chose 1.2752 level, and luckily price reached our take profit. So this was a very nice plus 52 pips trade. Let's review this trade. So what we have here? Here we have this resistance zone on a higher time frame. We have a bearish reaction and lower highs that we can connect with this bearish trend line. We have this confluence between this minor zone and this trend line. We have high showings of the stochastic RSI indicator, and we have this massive bearish candlestick formation. So we have 4 solid reasons to sell, and as you can see, price reached our take profit. This is Euro British Pound trade, and you will see that my analysis is very similar to previous one. This is 2-hour time frame, and we can see this significant zone here. The reason why this is a significant zone is because here price acted as a resistance twice and then broke it, and then acted as a support here, here and here. Price eventually broke this zone again. Here I noticed these lower highs that I connected with this bearish trend line and scaled down on a lower time frame, in this case 1-hour time frame. As you can clearly see here, we have this lower highs formation and lower lows formation. As I said, price broke this significant zone and went back to retest it with these massive wick rejections. So just like in a previous example, here we also have a confluence between this bearish trend line and this significant zone. Here we also have these high showings of stochastic RSI indicator, and when I combined all these reasons, I decided to sell. I decided to sell here and put my stop loss above this significant zone and this bearish trend line, and this time I placed my take profit based on a risk-reward ratio. I aimed for risk-reward 1 to 2. As you can see, I risked 17 pips in order to gain 34 pips. Price reached our take profit, but I didn't close it here. I closed it around 20 pips here because I didn't want to hold this trade overnight, and some important news were about to release. As you can see, this massive bullish, bearish and then bullish pressure again. So to avoid that, I closed this trade early and gained plus 20 pips. As you can see, this was another very simple trade. We had downtrend, lower highs and lower lows. We have this significant zone retest with bearish wick rejections, and we have these high showings of our indicator stochastic RSI. So I simply decided to follow the trend, and as you can see, trade ended with profit. This is US dollar Canadian dollar trade that I took, and this trade I took on a 5 minutes time frame, which I rarely do, but this time I decided to enter on a 5 minutes chart because volatility was very high and price was moving very fast, and I scaled down on this low time frame, and this is where I found my entry point. Here I marked this zone as a potential resistance zone on a higher time frames, and as you can see, price formed this bearish reaction. But because these moves were very fast, I couldn't find my entry point on a higher time frames, so I decided to scale on a 5-minute time frame and found my entry point here. First, as I said before, we have this bearish reaction to this resistance zone. Then we can see that price formed this double top chart pattern, which I like to trade. I think the double top and double bottom patterns are very useful, and it also worked this time. So price formed this double top pattern and broke the neckline here with this massive bearish candlestick. So here I knew that I want to sell, and I just looked for the opportunity, and I found it here once the price formed this bearish engulfing candlestick pattern. Price didn't go down immediately after I sold here, but that is why I decided to put my stop loss above this neckline break. We can see that price formed another resistance zone here and then continued to go down. I took this trade on Friday and I didn't want to hold it over the weekend, so I decided to close it here with plus 33 pips in profit. My initial take profit was too high, bears ran out of the power to push the price down, and simply week was about to end, so I didn't want to hold this trade anymore and I decided to close this trade. So what we have here, we have this resistance zone we have this massive bearish momentum, we have double top pattern, we have this neckline break, and we have this bearish engulfing candlestick pattern. So I simply decided to sell and follow this bearish momentum with a stop loss above this previous neckline, and as you can see, price went down and I closed it here with plus 33 pips in profit. Next, we have this simple trade on US dollar Japanese yen pair. You will see that this analysis is also very simple and similar to previous ones. Here on a higher time frame, we can see this massive bearish trend, and also we can see these lower highs that we can connect with this bearish trend line. This is 1 hour time frame, and on 15 minutes time frame we can see that price formed this resistance zone here. So this time we also have this confluence between this bearish trend line and this resistance zone. Here we can see very similar setup where price formed this resistance zone on a 15 minutes time frame and tested this trend line that we previously marked on 1 hour time frame. So we again have this confluence between this zone and this trend line. Plus this time we have a confirmation with our indicator. We can see these high showings of this stochastic RSI indicator, and this was very good opportunity to sell, but for some reason I missed it. I cannot really remember why I missed this trade. I probably had another trade running, so I didn't want to risk with this one. I remember that I spotted this setup, but for some reason I decided not to enter, and it was a mistake because price formed this massive bearish move, as you can see here. But once this same setup occurred here, I decided to sell, and this time I didn't want to miss this opportunity. So after this confluence here, I decided to sell and put my stop loss above this trend line and above this previous resistance zone, and to aim for a risk reward 1 to 2. And as you can see, price formed this massive bearish candlestick and hit our take profit. So basically this is a third same trade that I took. We have downtrend, we have lower highs that we can connect with this bearish trend line, we have a resistance or important or significant zone, and we have a bearish reaction to this confluence here. Simple trade where I decided to follow the trend, and it worked again. Unfortunately, I missed this trade here with basically same analysis and same setup. It was very good opportunity to enter after this bearish candlestick confirmation and put stop loss above this previous resistance zone and this trend line, and to potentially aim for this previous major low. As you can see, this would have been a very good trade. Here on US dollar Swiss franc pair, I want to show you very good opportunity to sell. Unfortunately, I missed this one, but now I will explain why I think this was a very good opportunity. Here we have this consolidation zone, but eventually price formed this massive bearish move and broke this consolidation. And also we can see that price broke this major support zone. We can see that this zone acted as a support here, 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 and here. So price tested this zone 4 times and failed to break it, but eventually it broke it here. And then immediately after this break, we can see this pullback. Price went back to retest this previously broken support with a double top formation here and here. And also this second top was basically bearish engulfing candlestick pattern. So here we have this massive bearish move that broke this previous support and then went back to retest it with this double top formation. So one top here, that is this one, and second top here, but this second top was also this massive bearish engulfing candlestick pattern. So it was a great opportunity to sell here and put a stop loss above this double top and also this broken support, and basically put a take profit wherever you wanted because price formed this massive bearish move. Look at this. Unfortunately, I missed this trade, but it was a beautiful opportunity because we had multiple reasons to sell here. We had this bearish momentum here, which is this one. Then we had a pullback and retest of this previous broken support zone with a double top chart pattern and also confirmation with this massive bearish engulfing candlestick pattern. As you can see, in all my trades, I decided to look for multiple reasons and to combine them. Basically to look for these confluences and then to enter a trade. This is exactly what I advise you to do. To look for the multiple reasons to sell and not just one single reason. Here you can see illustration of all these trades that I explained today. We started with British pound US dollar. And we had a reaction to this significant zone. We had a lower low, lower high structure. Then price formed a pullback to retest this previous low and also test this bearish trend line. And here we have a confluence zone that was confirmed with this bearish candlestick formation. On Euro Pound trade, we also had this lower highs formation. We had a significant zone break and retest. We have a confluence with this bearish trend line, with this significant zone, and price reacted to it with multiple bearish wick rejections. On dollar CAD trade, we had a reaction to this significant zone. We had strong move down, we had double top formation, neckline break, and then finally bearish engulfing candlestick formation. And on US dollar JPY, we had this lower highs formation, and on a 15-minute chart, we had this resistance formation. Price then reacted to this confluence between this resistance and this bearish trend line with a bearish candlestick formation and continued to go down. So in every trade, we had a bearish structure, we had a reaction to a zone, we had a confluence, and we had bearish candlestick formation. And when you combine all these tools, you have good reasons to sell. I hope this video is helpful to you, and if it is, please consider liking and subscribing so I can continue to make more videos like this. Thank you and see you in the next video. Bye bye.